So we are here to start with the with one of your core paper, financial accounting. This is the first core paper of your program, and the objective of keeping this paper is to make you aware with the financial terms, is to make you understand how we prepare balance sheet, how we prepare profit and loss account, and how they are analyzed, how we can read the information from those statements. Right. So our objective is not to make you the perfect accountants, but to make you understand and learn that how they are prepared and how they are analyzed. So for understanding how they are prepared, you have to actually prepare them. So our flow will follow like we will start with the accounting introduction of the accounting, then we will move on to the accounting principles and standards. Then we will move on to the preparation of the journal, preparation of the books of accounts, and followed by the preparation of trial balance, profit and loss account, balance sheet, and ultimately followed by ratio analysis and financial reporting part. Okay, so let's start with the financial accounting. Just give me a second, I don't have the digital pen here. So this is the definition of accounting as given by the American Institute of the Certified Public Accountants. This is quite a comprehensive definition of accounting which encompasses mostly all the functions of accounting in it. So the definition is like the art of recording. So firstly, it highlights the fact that it is taking accounting as the art. There are contradictory views that whether the accounting is an art or science. It says it is an art, recording, art of recording, classifying, summarizing in a significant manner and in terms of money transactions and events which are in part at least of a financial character and interpreting the results thereof. Art of recording, classifying, summarizing, interpreting the results thereof. So accounting is basically the art of recording, that is we need to record the transaction, we need to classify them and we need to summarize them. In a significant manner means the manner which is useful for the business. And what we need to classify and summarize is the money transactions and events which are in part at least of a financial character. So, before understanding and analyzing this definition, let's say, let's start some business. What business you want to start? What business will you like to start? No business will you like to start? I am not getting any response. For being in my class, you need to be very interactive. I will keep on asking the questions. Okay, we need to start a cloth business. Okay, so let's say cloth business. So many businesses are coming. Okay, we stay at Amrita cloth business. Our business is that we purchase, that we take cloth and then we stitch it and then we export it. So we are having that type of export house. We stitch it and then we export it. Okay, this is the business which we will carry forward in 4 lectures. Now give a name to this business. Give a name to this business. KNG Exports. KNZ Exports. Okay, Amrita Enterprise. Any other interesting one? Do you want to start this business as a sole proprietor, that is only one person wants to do, or you want that 2-3 persons should join together and should do the business, or you want to take it in the company form? Okay, 3 persons want to do business. Okay. Let's say these 3 persons are 3 Misters. Mr. X, Mr. Y and Miss Z. 3 persons, right? These 3 persons are joining together to form one XYZ enterprise which will do the cloth business. Right? So first thing is, when we want to start the business, we are doing the financial accounting for the business. When we want to start the business, we need to decide that in what form we need to start it. One option is Mr. X can himself start the business. If Mr. X himself starts the business, this is the case of sole proprietorship concern. Sole proprietorship means one person doing the business. Other option is 2-3 people can join together and they can start the business together. These 2-3 people who will join together is Mr. XYZ, and when they join together, in legal language we call it partnership. So partnership is formed under the Partnership Act 1932. Indian Partnership Act 1932 governs the partnership business. The other option is that Mr. XYZ can form a limited company. If they form it, if it is a partnership, it would be denoted like this, XYZ Enterprise. If it is a sole proprietorship, it may be called as X and Company or Y and Company if it is for Y. And if it is a partnership, it would be XYZ. If it is a company, now company can again be in 2 form, private limited, public limited. Have you gone through the business law paper? Okay, then you must be aware of this private limited, public limited. Private limited company form among the restricted number of members, and public limited among the public at large. Private limited is with the words XYZ private limited. Public limited is XYZ limited. Right. So my task is easy. I need not to take up that part. Now this business is formed XYZ Enterprise. Now this business is doing the cloth. So you started the business, you start doing the business. You would what would be your daily transactions? Can you think of few of the daily transactions which will take place? Buying and selling of what? Buying material, buying clothes, paying for labor. Be a little precise what transaction will take place. Don't be like logistic. Logistic is quite a big term. Buying clothes in wholesale market, right? So the transaction would be you will buy the clothes in the wholesale market, you will buy the sewing machines, you will do the repairing of the sewing machines, you will pay to the labor for stitching charges, you will buy the thread, and then you will manufacture a cloth. That cloth would be sold out. That cloth would be sold out. For selling out you will receive cash, right? So in one day there would be at least hundreds of transactions that would take place in a single day. You will pay for the labor, you will pay for the material, you will receive some cash from the customer, you will pay for the transportation charges, you will pay for the packaging charges. All those things will take place. Now what is the ultimate objective of carrying on the business? Why do we do the business? What is the ultimate objective of carrying on the business? Profit. I want to know, I want to earn profit, and earning profit is like this much I spent, this much I earned. Let's say this spent is B, this earned is A, right? So profit is equal to A minus B, right? Profit is equal to A minus B. But there are so many transactions which are taking place in a single day. So many transactions. I'm paying for labor, I'm receiving cash, and so many things. And if I need to calculate the profit, I will, at the year end, I will forget everything. I will not be able to recall how much I paid for the labor and how much I received the cash from the customers. That's the reason that I need to record these transactions. I need to record these transactions. As and when the transaction takes place, it should be captured into my books of accounts. As soon as I make payment for the labor charges, I should record that transaction in my books of accounts. How the recording will happen, that I will take later. But as and when the accounting says that as and when the transaction is taking place, you should record that transaction. It should be recorded in your book of account. Right, so the first function of accounting is the art of recording. That is, we need to record all the transactions which are taking place in the business. Now, I have recorded all the transactions. In a single day, I make 10 cash payments. I received 5 cash payments. And another day again, so many cash payments and this and that, so many things. And at the end of the month, I asked you, what is the cash balance you are having? Though you have recorded all the transactions, how much cash you received, that is recorded. How much cash you paid, that is recorded. But I asked you how much cash you are having in hand right now. I need some cash. So how will you tell me? You need to plus minus all the items. How much I received, that should I plus. How much I paid, that should I minus. एक ट्रांजेक्शन होगा 1 जनवरी को, एक ट्रांजेक्शन होगा 28 जनवरी को. So you have to go through all the books and you need to find out all the transactions. So that finding out is done in a organized manner, which is called as ledger posting, called as classifying. That is, we classify all the transactions into various heads. How much cash we received, how much cash we paid, how much we paid for labor, how much we paid into the bank account, how much we paid for raw material, how much I received from my customer. This function is called as classifying. First, I recorded all the transaction, that is, I didn't let any transaction go away. I recorded everything. Then I classified everything. Now the third step would be summarizing. You have to summarize the transaction in a meaningful manner in the year end. At the end of the year, for the purpose of summarizing, I will make a trial balance. On the basis of trial balance, I will make the profit and loss account and balance sheet. So earning profit is the ultimate objective. By preparing the profit and loss account, I will come to know how much profits I am earning. And summarizing in a significant manner, and in terms of money transactions and events which are in part at least of a financial character. All this recording, classifying and summarizing can only be done for monetary transaction. If the transaction does not involve money, it cannot be recorded in the books of accounts. So it should be a fully monetary transaction or it should be a partly monetary transaction. In case of part monetary transaction, we will record only the part monetary transaction. And after interpreting the results thereof, that is, I have prepared my profit and loss account and balance sheet, then I will interpret the results, whether my profits are sufficient, whether they are up to my expectation, and what needs to be done to improve these profits. Clear with this definition? No, we don't have slides changing, Ashim. I am on the first slide only. Ritesh, till now I have not introduced the term assets. So I think we need not to discuss about it right now. Okay, I said monetary transactions needs to be recorded. Question for all of you. Now, whatever accounting we will do it for a company, for the business. Now, your company in which you are working, let's say, it got the award for the best corporate governance practices. It got the award for the best corporate governance practices. Right? Now, this best corporate governance practices is a very useful award for your company. It has increased the brand image of the company and it increased the share price of the company at the share market. Okay, as an award, you got a trophy. You got a trophy as the award. How will you record it? How will you record it in accounting? As an award, you have got a trophy. Yes, it's trophy only. Trophy, shield. You will not record it because trophy does not have any monetary value. Yes, you got only trophy. What is this, Amrita? I really don't understood what you were saying. Register the award name in my business. Doesn't make any meaning to me. It should not be recorded in the books of accounts. Okay. Now I say, along with the trophy, you get a check of 5 lakh rupees. I slightly modify my question. I say, along with the award, you get a check of 5 lakh rupees. How it is to be recorded? Record 5 lakh rupees is again. Okay. So you mean to say 5 lakh rupees needs to be recorded. Okay. Accepted. Okay. I further modify my question. You got a trophy and 5 lakh rupees. Trophy is made of gold, studded with diamonds. I slightly modify my question. You again got a trophy and a check of 5 lakh rupees. This time, trophy is made of gold, studded with diamonds. Why? It only has monetary value. The brass trophy does not have a monetary value. Brass can also sell to a kabadi. He will give something out of it. Moral value. We don't record the moral values, right? So 5 lakh rupees needs to be recorded. That is clear with everyone. Yes, trophy will not be recorded because there is no monetary transaction in the trophy. Trophy cannot be recorded at this point of time because there is no monetary transaction. It may have the monetary value, but we are talking about in terms of monetary transactions. There is no monetary transactions involved in it, so the trophy cannot be recorded. Trophy will be recorded at the point of time when we sell it off. If we sell the trophy, then we will record that trophy. Until unless I don't sell it, I cannot realize the value. Right? And I have not paid anything for it. So it cannot be recorded in the books of accounts. Clear with everyone? It is same. You have to see the purpose, how is it received. Now I think definition part is clear with everyone now. Okay, let's move to the functions of accounting. So I think we have already dealt with the functions of accounting in that definition. Recording, classifying, summarizing, dealing with financial transactions, analyzing, interpreting, and communicating. I will send you all the slides. I will ask Tushar to do that. Now there are two types, bookkeeping and accounting, two terms which are being used interchangeably. Bookkeeping is basically restricted to recording, classifying and summarizing, while accounting is a more comprehensive term which includes the functions of interpreting and communicating also with it. So accounting, bookkeeping is a subset of accounting. Now there are two types of accounting, financial accounting and management accounting. I think management accounting paper is not in your syllabus. You are from 1 year program or 2 year program? 1 year, okay. So management accounting will not be there in your syllabus. Financial accounting and management accounting. The difference between financial accounting and management accounting is the objective of both types of accounting is different. Financial accounting is done for the purpose of satisfying the statutory obligations. We do it in a presented format. We have the concepts, principles and standards which guides the preparation of the financial accounts. While management accounting is done at the desire of the management. You must all be aware with the term MIS. MIS. What is MIS? MIS is a part of management accounting, management information system. So that is a part of the management accounting, the monthly reports which are being generated through the MIS, that are the reports which are the part of the management accounting. While financial accounting is statutory compulsory for all the organizations to do, management accounting is not compulsory. If some organization wants that they want the report, they want the monthly reports or quarterly reports or 6 monthly report, they can have it. If they don't want it, they cannot have it. So it is not compulsory. Analysis of performance in financial accounting is prepared for the company as a whole. Financial accounting is prepared for the company as a whole, while management accounting is prepared. It may be prepared for a particular product line or it may be prepared for this particular store or location, that ways according to the desires of the management. Uh, Divisional reporting we have in financial accounting also. Um, just to explain you a bit, like Whirlpool. Whirlpool produces ACs, refrigerators, washing machines, right? These three items are there. I don't know about others. So, when the financial accounts for the Whirlpool would be presented, they would be presented for the Whirlpool as a whole, including ACs, refrigerators, and washing machines, right? While if the management accounts are prepared, they may be prepared for a particularly AC division. There is no compulsion for the management accounting that they should be prepared for AC division, refrigerator division, washing machine and all. It is according to the desire of the management that if they want that, they want the reporting for the refrigerator division, they can have it for the refrigerator division. Then data used. Case of management accounting, data in case of financial accounting is based on the historical data. That is, whatever happens, we capture that, and on the basis of that, we prepare the profit and loss account and balance sheet. While management accounting is based on, it may be based on the historical data or it may be based on the projected data, right? Monetary measurement, financial accounting is records the transactions which can be measured monetarily, while management accounting may be for the non-monetary transactions also, like the like the reports of the HR division, headcounts reports, right? Performance reports. They are also a part of the management accounting. Periodicity of reporting. Periodicity of reporting in case of financial accounting is fixed. Yearly you have to prepare the financial accounts, and in case of listed companies which are listed on stock exchange, you have to prepare the quarterly accounts needs to be published. While in case of management accounting, the reporting is not fixed. It is according to the desires of the management. If they want the monthly report, they can have it monthly. If they want the weekly report, they can have the weekly report. Legal compulsion. Financial accounting is legally compulsory to be done, and management accounting is not legally compulsory to be done. Financial accounting is compulsory as per the Income Tax Act, as per the Companies Act. While in case of management accounting, there is no legal compulsion. If the management desires, they can have the report. If they don't desire, they will not have the report. So this was financial accounting and management accounting. Any doubt with the financial accounting and management accounting? Vineet has asked, why is fiscal year from April to March word over? Vineet, why is calendar year January to December? Same is the answer with me. For this, why? I know as per the Hindi Vedic standards, April is the new year. But why it is word over, that I need to look into. There would be answer for it definitely. Well, not related to it. Let's move on. Okay, let's not go into this debate. Uses of accounting information. Now, why do we need to prepare this accounting information? Who all requires this information? The first person who requires this information is the investors. Investor may be in the form of the proprietor, it may be in the form of the partnership, partners, it may be in the form of the shareholders, right? So investors requires the information that whether they have earned the profit or loss, how their business is doing. That's why they want that accounting information should be prepared. We should prepare the profit and loss account and balance sheet. Then lenders. Lenders are the person who has given the loan to the company, right? So lenders requires this information, that how much, what profit we have earned, how is the company doing, do we maintain sufficient liquidity and solvency, we would be able to pay their debt, the company would be able to pay them interest. Creditors. Creditors are the persons from whom we have made the credit purchases. Now, we started the business of XYZ Enterprises which was doing the cloth business. So uh, I purchased raw material cloth from wholesale market, and there are two ways to purchase the cloth there. First, I can pay cash and then purchase it. The other way is I can purchase the cloth and I can say that I will pay the cash on a later date. So when I say that I have taken the cloth and I will pay you cash on a later date, it is a credit purchase. So those persons are called as the creditors who has given us the goods on credit. Now creditors has given us the goods on credit, so they would be interested in our accounting information for knowing that whether we would be able to pay our debts on time. Then government and other agencies. Government and other agencies are basically the tax authorities. They may be the service tax, VAT, sales tax, the income tax, wealth tax, customs, excise. They would be interested in knowing your financial position to so as to ascertain that whether you have paid the accurate taxes or not. Public at large, as a matter of curiosity, would be interested in knowing the accounting information, that how much their business is earned, how the economy is doing, or this public may have the proposed investors with them who will make the investment in the company and who wants to see that how much profit the company is earning so that they can make the investment in the company. Right? What is the need for accounting? We want to prepare the accounts because the business wants to know, or the businessman wants to know, what he owns. Owns means the assets of the business, that is the things which the business owns. What we owes is payment of outside liabilities. What are our liabilities? So assets are the things which we are having, liabilities are the things which we have to pay to others. How much is the profit or loss we have earned, and what is the net financial position of the business. What is the importance of accounting? Why it is important? It helps you in keeping the systematic record. It keeps the systematic records, that is, we maintain the accounts in a chronological order. So the transaction which is taking place at that point of time is uh, we maintain the accounts in a chronological order. So at any point of time, we know what is happening in the business, how much we paid to one party, and how much we have taken from the other party. Right? It helps in protecting the business properties. Everything which we purchase, whatever assets we purchase, is recorded in the books of accounts. So when they are recorded in the books of accounts, we know how much we have purchased and how much we are having. Even if we purchase one chair, so we record it in the books of accounts that one chair is there. We purchase the laptop, we record how many laptops we are having. So at any point of time, we will know how many chairs, how many laptops, how many assets we are having, and accordingly we can take care of our assets. It ascertains the profit or loss. It helps you in finding out the profit or loss, in finding out the net position of the profit or loss. It ascertains the financial position. Accounting helps you in ascertaining how much assets you are having and how much liabilities you are having. It facilitates rational decision making. On the basis of the accounts, you can make an appropriate decision as to the future course of action. On the basis of profits, you can take the decision you need to go for new product line, or you need to start a new business, and you can interpret your results accordingly. Till this point of time, everything is clear with everyone. Any doubt relating to any part? Okay. Okay, let's move on then.